The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday, the 23rd of January. We're looking at the Dow down 263 at 49,121. Let me just see what Intel's doing. INTC. I'm not sure. Oh, wait a minute. Just let me see. Okay. Yeah. Intel's down 8 at 45.72, made a peak G at 54.60 yesterday. I'm not sure what this is all about. And in fact, I want you to start with this just to say that I didn't understand the big rally. Intel was one of the very worst. In fact, I'd say it wasn't just one of the worst. It was just, you remember Dell computer, all the computers that the desktops that you used to get, as well as the laptops, all had Intel, a little sticker that said Intel, and that changed dramatically. They did everything wrong. NVIDIA and all these others did fantastic work, and how it made this base down at this is beginning of January 2025. It had this trading range between about 18 and 26. Really, it was more like 25 and 19. And it just traded sideways. And then it broke out and it did this like left side, right side, where you've got the x-axis and the y-axis. And look at this sideways move that flipped and it went to the upside. I couldn't understand it. I said to myself, gee, if the government's getting in, grab some intel because you've got that sponsorship. But on the other hand, I kept saying to myself, and I mentioned to subscribers once in a while, they're just a horrible company. It's going to take them forever to get onto the right track. I don't know how this move up is sustainable. Well, I still don't know, but then look, when you look at the weekly chart, this is nothing, just one little blip here. It's been moving up from the let's call it the 20 area to 54. So I'm watching this closely, and I just want you to go to this because I want you to show you that the SMH is only down $1.99, down $2 at 400.82 from the 408.73 high of yesterday. Yes, 408.73. So this to me is really key. It appears now I needed to do this. I'm going to do this for 1 second. Let me run the numbers. So at least I know I've got that done. There we go. The Dow down 264. 9-period moving average still acting really well. The MACD's weak. The relative strength index is kind of weakish. Stochastic's under 80 at 66%. That's no good. On-balance volume's not bad. But most importantly, look how many times it went to the Chapman Wave Inside Track. This is a technique I developed a long time ago. I just keep looking at it and say, it is so simple. Please use it more and more. And I try to use as much as I can. But look how the price, the high was 49,633 on the 13th of January. Little birthday there. And look what happened. Chapman Wave 2-bar reversal. And it comes down, but then it retests it under the 49,633 level. It goes to 16, I believe it was. Yeah, 16, 49,616. Pulls back very sharply down to the 48,400s and then screams up to where yesterday's high of 49,607. Slightly. Now what we've got is this. Usually I draw these in and then I say, okay, we're done. I don't like messy charts, although some of you might think they're messy. They're not messy to me. Messy means that they have lines and arches and stuff that are now redundant. Well, look at this. You've got yourself, and I'll make this nice and thick, style, color, weight. That's just for now. Just make it really a big bombastic gray line. Now, let's make it a bombastic black line. Blue's good enough. Okay. That's the resistance. So I said to subscribers this morning, I'm getting a little bit cautious. We were cautious recently, and then I said, okay, let's see what happens. And I'm still kind of cautious about the Dow. Yes, another reason. This is the third week. Look at the lower highs that have been made in this Chapman Wave Inside Track resistance zone. Now, again, we've gone to the pink line this week. That was yesterday, and we pulled back. So that just says to me, keep this in mind, that in a way we're getting a little toppy in the Dow. That's all I'm saying, okay? Nothing yet technically that says, and technically meaning the 9-period moving average is still strong. If we had to go to 48,800, I say, looks like we're going to retest the recent low at 48,428. All right, that's the Dow. Let's skip monthly charts. They're not important right now. The S&P has done something very similar, but look at this. Look at this trend line. I'd like to take it from the top. I'll take it first from the top. There's another technique that I developed a long time ago using trend lines, how trend lines tend to, on the way up, they tend to form very nicely. And then when you get to the third accelerated trend line, that's when you got to be worried. We haven't got to, this is the second one on the downside. See, I'm just putting the trend line with the resistance levels. So the 9-period moving average did cross positive this morning. But the 9-period moving average is just hinting that there's weakness there, and the MACD is very weak. The relative strength has rallied a little bit. The stochastic's way down 43%. The on-balance volume is quite good. And the weekly chart, now we start to test the 14-period moving average, which we didn't even look at for months on the way up. Now it's testing it over and over. I do have this. There's no other way I can count it unless I use the alternate count, which says this could be a peak D, but I don't even want to get into that right now. There are a lot more things that are important for the weekly chart, and that is the 9-period moving average is way above the 14-period moving average. That, so far, is a big plus. All right. QQQ. That's a little different. It's been struggling. The all-time high was back there, 637.01, October the 29th. Remember, Technical Friday, so this will be delving into a lot of the technical stuff. As I look at it, even more important than that is why, within the context of all the everything that's going on, how we survived with that big spike the other day because we went from red to Greenland, that just says to me how the market is still unfolding with rotational action is really important. I'm going to get into that. As I said, we'll look at Procter & Gamble in a moment. There are other aspects that are very important. But look, the QQQ is really struggling. It's in this rectangle, nothing wrong. Struggle means that it's struggling to make higher highs. Struggle also means that it's still holding very well without very serious turndowns to change the 9-period moving average weekly into a negative. So far, it's still pink in the daily. So the QQQ is struggling some. I'm going to go to the IWM, and you'll see all-time high yesterday, pulling back a little bit today, down 3. At 266.74. Nothing to see here that's very negative technically, just a pure pullback on a purely technical basis, making a potential peaking. I'll be back. Dow's down 313, S&P's down 3.5.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, let's get back to that. I've got the futures up here. I don't want to even discuss it right now. I've got an F in the daily, a D in the 1 minute, D in the 2 minute, and let's see if we start to pull back from here. All right, so the IWM holding very well. It's been the leader, a bit of a pullback today, and let's go to the SMHs now. Let's see where they are. They're down $1.95 at 400.88, holding very well. So a couple of things that I'll do as we're looking at this, because I want to go to gold. There's a lot to discuss. It's either there's a lot to discuss or absolutely nothing. It is just bullish. It is going higher. Don't get in the way. Don't think of shorting. But look at this. The 9-period moving average is way above the 14. The price is way above the 9. The MACD is still expanding in the histogram. The flat stochastic at 94% is great. You have to have a dark news cloud cover to get gold to pull back, not just on a daily basis, which it's done just what was 2 sessions, little week sessions in this huge move up, just going from about the 10th of January. And the on-balance volume is the clue to say, oh, be careful. Now, let me just show you this here. I'm only using it as an idea. You see this 9-period moving average, it goes green when it flips over the 14, and it goes pink when it goes under the 14. It's been green for quite a while. So this little pink line that I drew in here is the exact height of that top, the 3 bars that made that top right there. And that was back in October, week of the 17th, week of the 20th, and the week of the 20th. Oh, it's a daily chart. Yeah. And that was up at the 4430 level. So this just says to me, be aware that there could be some kind of topping action. Now let's go to this chart right here. And that is, I hope this is the one. Yes. So this is the Dow. You see the cluster of resistance levels and the cluster of support levels. That's why the Dow's been... Think of this as a tide. I know that people always talk about diagonal lines. I've spoken about this forever. I remember talking to Tom O'Brien many times about this. And I say, how does a market know to go from 20 to 25 to 30 to 35 in this diagonal line? And it keeps getting there and then it pulls back. And what I said is that there's upside energy number one. And there's a rising tide. And as the tide goes up, that measured move just moves up with the tide. So that's why it's almost like an equal measure. Well, that's what we've got here, which says to me, looking at the downside for the Dow, 47,935 is the automated support level, and 50,263, 49,857 to 50,263 is the resistance. Use the same thing now to gold. Look what happens. We've broken above any of the resistance levels. There'll be no pink support levels for a while, but we've done that. We did that once before at 4209, and that was back somewhere in the January 2025 area. And look what happened. We went to 4530, and as an automated Chapman wave resistance level, this is what Herb Bruin, late Herb Bruin, did for me. And that suddenly popped up after you made those two bars. I think it was the third bar where that was. So I'm waiting for one more action to say that there's an automated Chapman wave resistance level. Look, the MACD isn't as strong as it was there, but look at the price. Look, the stochastic is turned down a little bit before that move right there, and that was the clue. But look, MACD, the stochastic right now is flat. I don't want to get in the way of this. It's fantastic. That's why we just held on. I should have just kept adding, of course, I haven't done that, to the original buy of the physical gold. And that was at 20, and now it is at 37. So all I can say is that's something that I'm looking at. I'll be back to this chart in a moment, but I do want to go on because the question was, Basil, do we have a top in gold and silver? You remember I had that 3 days ago and I said, no, I don't have a top. Well, look at this. There's a doji candle. The MACD is still strong. Everything's strong except for the on-balance volume. Everything is strong positively, but the on-balance volume is saying short-term, be prepared, there could be a bit of a pullback. And if you look at the GDX, all-time high, as we speak, that's a leg F continuing. 106.79 is today's high. Same thing, flat stochastic at 91%. On-balance volume was a little bit overbought, pulls back, and then what does it do? It bounces up again. And even more important than that is that you're in a leg E in the weekly chart. You're in a leg G/C in the monthly chart, market vectors, gold miners, ETF. You're up $1.17 right now. Nothing to see. This is because of the, if you can listen to Carney's speech, if you listen to Macron, if you listen to all the geopolitical aspect of it, there's great worry amongst different countries. And what do countries do? They flock to gold, but you've also got China. You've got a lot of buying of gold. And that just says at this particular point, you need something. The only thing I can think of will be margin requirements. That absolutely is going to be necessary. Look at silver, all-time high right there, up another three. Now it's up $3.30. To get $3.30 at some point, that was a huge move. Now it's just ho-hum. It's just up another 3.3% at 99.62. Hit 100.19 today. Continuous silver contracts. Well, we've kept our core mining. Should have added to it. Haven't added to it. But what can I say? Okay, so look at this. That's really important. So answer is no. And if there is, I believe it has to come. I don't think it's going to be geopolitical in terms of the negativity for gold. It's just positive. So it has to be margin requirements. Out of the blue, you're going to get someone. When I drive, I've spoken about this guy. I haven't even been there once. There's a guy who has this little shop. It's just a standalone near a garage on a major street in Newton. I've seen him for 12 years or something, and I thought, oh boy, he's going to be the clue to say that. And he survived the big turn down in gold before. He just got in, and soon after that it turned down. Now there are cars parked out every day. And remember, I mentioned this about 2 months ago, a month or so ago. I said that someone I know who has a jewelry store had said to me that you can't believe it. He's doing, this was now back in, wasn't it November, maybe December. He's doing $1 million a month in turnover in gold. And this is the jewelry. This is not jewelry. This is just his gold section. So all I can say is that this looks very serious in terms of the buying pressure. To get it to turn into selling pressure, the only way I can see it is maybe margins get raised and all of a sudden there's just a technical conspiracy or whatever you want to call it to get gold down and silver down. And then we have to deal with it. That hasn't happened yet. All right, I'm done with that. I want to go on to the bonds, the TLT, just quickly. TLT, nothing to see here, up 19 cents. It has bounced the TPT, that's the yield, has come down a little bit. And yeah, actually quite a bit from 35.50 to 34.40, so that's 3.4. Yep, that's quite a bit of a turn down. So with that said, I think we've covered a chunk. Now I want to look at rig. I had a question about rig. This is still didn't go into it. Here it is at a rig.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
As I said, Transocean Limited up 20 cents at 4.90. I think it was added to the S&P or something. No, it couldn't be. It's a $4.90 stock. Added somewhere. Anyway, Transocean Limited, very nice action above the two. You see, the 200p moving average was a sticking point. It couldn't get above the weekly at 447. And then, pow, in one leg, look at this, straight up. That's really important. And the technicals are confirming finally in the weekly chart. The daily is still very strong. So that makes the 460 on any sudden pullback that lasts 2 or 3 days. 460 should be very strong support. Let's rather look at the support than looking at where it can go to, because on the left side, the high was 8.88 back in September 23. It went down to April of last year, went down to $1.97. So this is a fabulous move. All right, good eye in that Dan Fletch. Okay, next we're looking at, now I need to go through very carefully. Let me look at my notes. So question came in, BTG. BTG, this is 82 Gold Corporation. I've always wondered about the name 82 Gold Corporation. Was probably started in 82. I don't know, 82. And it's at 525, up 6 cents now. And the statement was, can you look at BTG for a long on the show? It's a junior gold miner that didn't participate in the recent rally to the extent of others. It's now moving likely because the Canadian miners come online, expecting 250K ounces at 2026. They do have some mines in political hotspots like Mali, but the CEO actually has navigated the situation better than larger producers like Barrick. Okay, so let's just so look at this. It's doing well. It's a little extended on the daily chart. The weekly chart still has this rally that goes to $5.90. What was it? $5.94 back in October the 17th, the week of the 17th. So let me just type that in, $5.94. So let me just do this. Putting it into the perspective of, you know how I like to look at the Dow stocks, and I say usually when the Dow stocks are the ones that really come on strong after not being that strong, but then that's usually a kind of a culminating shorter term move that you've got to start watching closely, because when they start to pull back, now you've run out of room. But what happens is you've got the rotation that the small caps take over. So this is the same as gold. Have I got B? Have I got still notated? Where did I type that? Let me just put it back here. B. So B is Barrick Mining, up at the all-time high yesterday, 50.80, up $1.07 today, 50.32. There's nothing wrong with this. So the relationship so far is still, let me look at Newmont Mining. All-time high as we speak at 123.75. So that relationship, now the little ones are being dragged up. At some point when these big ones take a breather, that's when I think you will see the same relationship of the XLF, the big financials, and the KRE, the regional banks, playing catch-up, now leading the way. So this rotation is something when I spoke about in my webinar that I did 2 months ago. This is exactly what we're looking at. That's the reason why we went into these deep cyclicals. Now what's really interesting is I don't see anything other than on a purely technical basis. Maybe let me go back to this just for one brief second. Let me go back to this chart right here. And let me do what we're looking at, BTG. Nothing wrong with that chart. Looks really good. Let me go to Barrick. Look at that. Walking the 9-period moving average. Newmont Mining. Bouncing off the 9-period moving average. Yes, can it be oversold? Absolutely. But that doesn't mean they say that it's done that yet. It could get there. When it starts to turn down, you can start to say, oh, it was overbought. Certainly, there's no... it hasn't, even when it got oversold back in November. Look at that pink 9-period moving average going on for about 2.5-3 weeks. Goes green, it goes back, makes a beautiful W formation, rising W formation in the 914, and just continues high. I just don't want to get in front of it. So the question is, BTG, what I'm going to suggest is this. You still have to use money management. So BTG, that's 28. What did I say it was? 82 gold core. I always look at that name and I think, where did that come from? It's looking very good. It made a high today at 534, swinging back. This is how I would do it. Step in, just get your foot in the door here. But this is something where I'm just even wondering if you need to put a stop in because it's a longer term buy. So your stop has to really be down at 523, somewhere at the black 14 period moving average of 481. So step in here, just get your foot in the door. By Tuesday of this coming week, we'll have an idea whether or not there's a pullback into the green candle of yesterday, somewhere in the 520 area. Sorry, the 505 to 490 area, where that's where you want to be thinking of adding, or that's maybe where I say, oops, here comes the pullback. But in the meantime, step in right here at 524, knowing that it's just your little starter position. I think you've identified a whole bunch of fundamental things that are good. The chart is agreeing with you, but I'd like to see the 9-period moving average hold as it's doing now, even on that big pullback, which it's done. But I'd like to see the MACD, which hasn't turned positive yet. It's a 0. It's very close. If that can go positive, you've got yourself another good 20 to 30 cents on the upside, and you can start to get to the 5.94 level. I don't know what that B is. Right there, get rid of that B. Okay, so yes, I gave you the downside, gave you the upside, and the inverted Chapman wave long wick candle of 4 months ago. It's that this rule is for 2 bars. This is the 3rd bar, but I can just give it to you because it's January, that if there's a chance that this holds on a closing basis above 547, I'm going to be a little, I'm going to make it 550. If it can close above 550, in February, you should be testing 594. That's the way I would look at it, purely on the Chapman wave inverted red Roman candle. And on the downside, if it breaks over the whole of January, if it breaks under 481, it's stuck. I think it's doing very nicely right now. Next question came in. Wow, did I just did that? Oh, SND. This is another one in the same category that I wanted to add for subscribers today. And I thought, I just can't do it. This is Smart Sand Inc. Serves what? Oh, this is for fracking, sand, mining, logistics, and management. It's done great. I've spoken about it before. I think we might even have had it once for a brief moment, but this is a leg D in the monthly, leg D in the weekly, and a leg D in the daily. I like this stock very much. SND is the symbol, down 9 cents today at 4.50, but I have to wait for a pullback. Just in this environment, it looks to me like there's a chance that if we get to the 430 area, that's where I'll reassess to see, is this time now to get in, since it's made multi-year highs. Okay, I'll be back in a moment. We want to talk at high-grade copper, and then some questions in the debt and in the in the YouTube PG Procter Gamble. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, so we've got Dan from New York, and then every week, it's almost every other day, posting the Taseko Mines price. It's like you're going from Miami to the next stop. He's the conductor shouting, Washington, Philadelphia, New York. Well, it's at a recovery high. It's at $7.53, up 33 cents. That's great. Great high. Taseko Mines copper. Copper right now is trading at up very nicely. It pulled back sharply. Now it's up 16 cents at 5.93. So very good. Next question came about Galaxy GLXY, Galaxy Mining, Galaxy Digital. Trading, banking, call centers, data centers. So this spiked. When we last looked at it, it was down at 27. It hit the 34s yesterday and pulled back 5 days ago, and then it pulled back. And I'm calling this a B. It should really be an E/B. I have to do it because you got that D and then pull back, and now it just pulled back. I think I said that the other day. It just pulled back a little deeper. I'm going to have to give it an alternate count just so that in my mind I can feel that it could be done, but that 14 is way over, just great. The MACD is good. Stochastics at 78%. I prefer 82%, but it's holding well. So yes, I do think this is in play, but most importantly, I do think the pullback was a little more. What can happen is it's 31.36. If it can close in the next 2 days, going Monday into Tuesday during my show, if it's above 32.35, no, let's make it 32.55. If it's above 32.55, then it's making the V-shape or the cup shape formation, and by the 29th to the end of the month, it should go to a higher high going to the 35 area. But if it pulls back in the next couple of days and slips under 29.30, that says, it's just stalling. Nothing wrong in the sense that the technicals are still very good, but the price hasn't performed the way it should. So I hope that helps you. You want to get in. So you know what I'm going to suggest? Because of today's action, I'm going to suggest you just start a position here at 31.22, but this one, you've got to have a fairly tight stop, because if it gives it back either today or Monday and goes under 31.23 right now, where would the stop be? I wouldn't have more than it's up 30 cents. If it gives that up by the end of the day, I'm out. But if it holds, that's going to be very good, because it's saying that the technicals in the daily, the technicals in the weekly, and the technicals, the monthly, are all strong. So looking out, it should perform well. But just the last 4 sessions, it's not a big deal, but it is over 10, 11% pullback, and I just treat that respect. So just start it if you want. You could wait. In fact, you could wait for a move above 31.50 just to get some traction to the upside. But, with 30 cents, with a move that could fill this red candle right here, I'd say just nibble, just get a starter position and I have a fairly tight stop, even though as a starter position, I usually give it a wider stop. No, this is different because it's got to perform right now. Okay, I hope that helps you, GLXY. Next question came in. Oh, I haven't even got to Procter & Gamble. Nike. Yeah, Nike is... Look, I didn't update it. I'll do it right now. Look at that weekly chart. Not very strong at all. Trading down $1 at 64.45. But look at this. There's your peak A. There's your peak B. There's your peak C. And there's your D. Remember, D is where other things can happen. That's exactly what happened here. So it had a nice move yesterday. Today it's given a chunk of that back. So you're looking at this negatively. I'd be looking at this negatively just on the short term to say if it accelerates and it goes under by Tuesday, if it's gone underneath 63.61, it's a 64.47. That's the dreaded H pattern. But it could actually hold you and just trade sideways. That weekly chart is suggesting, because the MACD did flip a little bit positive. No, I'm looking at the same as you. I think I don't think it's a short per se until it really accelerates from here, because it could very easily hold 64.30 and then have another up day, and then it could go sideways right here. It'll have the dreaded H pattern if the MACD can turn down, and the 9's still strong at 14. No, I agree with you that it looks weak, but I would not be doing anything more than treat it as, that's the way I'm doing it right now. It's stalling, that's all, stalling. That goes with the question that you said, that like the Dow is stalling, this is stalling. CRM, let me look at my order here. Okay, let's do this quickly before the break, because in the final recap, I want to do a bunch of things. So here's Procter & Gamble. It had earnings yesterday, and they were good. And I had a feeling that today, because a lot of people suddenly touted the stock, they would look good. They've done that so many times before, and it keeps fading. This is the move that I like. And I said to subscribers, I like this, but our CVS is the same category, having failed, and then done very well. But it only failed in a range of 85.15 to the 74s. This one is making lower lows. So this to me is far more positive, even though I've got this as a potential leg D, 82.50. It's down 15 cents. Out of the two of them, the question was, which one would you... PG has the greater upside potential because it's been hit so badly. But the one that's performing right now, look at this nice candle in the weekly chart, gray B and a gray C. None of the technicals are confirming other than the 914. That's all I want. I love that. So we long this, and I think out of the two, just for the moment, I'd say that I would add Procter & Gamble under other circumstances, just not yet. So the question came in, is this the time to finally buy Procter & Gamble? Because it's been on our list for a while. And I'd say it's almost the same thing where I'd say you could start a position at 150.33, but I'd rather give it just a couple of days, because if it can get into this candle from yesterday, which was a big candle, and get into the 148, I know it's just 2 points. If you're looking at something that's gone from 180 down to the 138 area, it's a huge upside potential. The 200 moving average is at 200, hasn't been there for a couple of weeks, and that would be my first target. So yes, if you're not interested in CVS, but this is your choice, then I would say you could do the same thing as I spoke about a moment ago. Nibble at 150.36. I think it's a little overbought, but you really want to start looking at it in the 148s. Okay? I hope that helps you. Next question came in. Ondas, ONDS. Just to update it. Yeah, you see it's pulling back It's not doing well. I had this potential for the cup. I can get rid of that now because it's doing the exact opposite. So if you do a technical analysis and it immediately starts to do the opposite, you say, okay, you're the boss. I'm following you, and you're weak. So we're out of it, and I'd say just be careful. Next question came in. Did that. And we've got a break coming up, and I had a couple of questions. Oh, there it is. So if I can so CLX. Yeah, I'm looking at it. I'll be back in a moment. We'll look at those two. Dow's down 230 and the S&P's up 11.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yes, so look at this, CLX, good eye. Who was that in the Tiger YouTube? CLX, this is the one that I actually liked a long time ago, and then it just didn't do anything. It went down even more from the 114 level. So CLX is Clorox company, trading up 290 at 115. This is a lot better looking chart than the others. But this tells me this is the rotation I'm talking about. Now we've got this rotation into the domestic, into the consumer product area. I think this is a very good thing. That's what I'm saying. I don't see any kind of major market turn down. I do see choppiness coming up, and it has already been. So let's go through this. So that's that. LAC is in the lithium area. Lithium America doing very nicely. Good move today, up 48 cents at 661. I mentioned this to subscribers the other day. I'm liking lithium. I'm liking uranium. So this is doing very well. It's a 661, pushing away from the 200-period moving average. I think 690 to 710 would be my first big target. If this can hold the gains today, that's a very good thing. So with that said, there's a lot that I want to discuss. I'm going to be doing my hour and a half, whatever it is, overview for my subscribers this afternoon. You can become a subscriber. You'll get that. And this is really important. This is a very important period because we've got a rotation going on and it's selecting certain areas. I mean, look at the steel, SLX. Steel, look at that move. This is very important. So the question came in Alcoa. Yeah, Alcoa is one of ours. We've got it down to the 42 area. Is that 42? I believe 43, I think it is. It hit 66.95. It's pulling back a little bit, but I think it's holding well. This is those deep cyclicals. Look, if the steels are doing well, aluminum's doing well, Boeing's doing well. What is it doing today? It's down 13 cents at a recovery high. I think we've got a rotation that's very important to identify. So I'll be back on Monday. Check out my opening call daily newsletter, and of course I'll do my video for subscribers this afternoon. It's almost like a webinar. It's very intense, and it goes through all the stuff we have and what I'd like to get, and you can make